Trading breakouts appeal to many Forex traders because support and resistance levels are supposed to be price floors and ceilings. If these levels are broken, you would expect for the price to continue in the same direction as the breakout. If a support level is broken, that means that the general price movement is downwards and people are more likely to sell than buy. Conversely, if a resistance level is broken, then the crowd believes that the price is more likely to rally even higher and will tend to buy rather than sell. Many retail Forex traders have greedy mentalities. They believe in trading in the direction of the breakout. They believe in huge gains on huge moves. They want to catch the big trend. In a perfect world, this would be true. But the trading world is far from being perfect. Breakouts fail simply because the smart minority has to make money off the majority. Don't feel so bad. The smart minority tends to be comprised of big players with huge accounts and buy and sell orders. In order to sell something, there must be a buyer. However, if everyone wants to buy above a resistance level or sell below a support level, the market maker has to take the other side of the equation. Retail traders like to trade breakouts. The smart minority, the institutional, more seasoned traders, prefer to fade breakouts. The smarter Forex traders take advantage of the collective thinking of the crowd or inexperienced traders and win at their expense. That's why trading alongside with the more experienced Forex traders could be very profitable as well. That's why today I'll present you a London breakout Forex strategy, one of my most useful and practical breakout trading strategies. This strategy is specifically designed to benefit from a sudden spike of trading volume near the London open session. The London breakout trading strategy is one of the simplest trading strategies that you can use. This strategy makes use of the increased volume that you will see during the start of the London trading session. I'm sure you know that the Forex markets are categorized into three main trading time zones: the Tokyo session, the London session, and the New York session. The London session is known to be the start of strong volatility, as London is one of the biggest capital markets in the world. This is because the beginning of the London session is also the end of the Asian session. Right before the London Open, the Asian markets are beginning to close down and square off their open positions, and avoiding big position trades, knowing that the London Open volatility might affect their position prior to finding its direction. That's why during the London Open hours, a sudden spike in volatility occurs, causing momentum in the Forex market. The main point of this trading strategy is that you need to focus on the short-term aspects of the price movements that comes with this method of trading. This trading strategy is particularly suited for traders who trade intraday or prefer to scalp a few points from the market. If you look closely at this chart, you will see that the price action during the Asian session is quite range-bound. Prices don't make any big moves during this period. This is often the case most of the time, unless there are some big news releases during the Asian session. After you identify the session, the next step is to plot horizontal lines to establish the range from the Asian session. After the start of the London session, you will wait then for the price to break from this range. Here is what you've probably been taught to trade the London breakout. So first, you need to draw support and resistance lines during the Asian session. Then place a buy stop order approximately 2 or 5 pips above the resistance zone. Afterward, place a sell stop order 2 or 5 pips below the support zone and wait for the breakout. That's a losing system with no chance of consistency on the long term. Anyone who's tried the breakout strategy will know how challenging it can be. Too many breakouts don't work out the way you expect them to. Many breakouts that start off strongly quickly fade and start to track back into a range. I've personally lost a lot of trades trying to catch London breakouts this way, until I realized that I have to think differently. That's why during London session, I don't take trades in the direction of the breakout. I fade the breakout. I won't take the normal route of the breakout. I go the opposite way. If the price breaks above, I search for short trades. If the price breaks below the Tokyo range, I look to buy the breakout. That's the concept of fading in trading. Fading breakouts simply means trading in the opposite direction of the breakout. You would fade a breakout if you believe that the breakout from a support or resistance level is false and unable to keep moving in the same direction. In cases in which the support and resistance level broken is significant, fading breakouts may prove to be even smarter than trading the breakout. Keep in mind that fading breakouts during London session is a great short-term strategy. Breakouts tend to fail at the first few attempts, but may succeed eventually. So how to fade the London breakout? Before the London Open, draw a support and resistance line around the last candlesticks that formed in the Asian session. I usually look for ranges in the last hour before the London Open. You don't need 3 or 4 hours of candlestick activity. You just need a small range of few candles prior to the London Open. Then wait for the price to break that range, either below or above it. When this happens, you simply wait for the price to break on the other side of the range. So you don't need to trade the breakout, you fade it. You want to see trapped traders attempting to catch that breakout. If the price returns into the range and breaks it on the other side, you can search for trades in the opposite direction of the London breakout. I usually place my stop loss on the other side of the breakout and I aim for small profits. The most ideal currency pairs to trade the London breakout system is the JPP USD and the JPB JPY, but your choices are not just limited to these pairs. You can also trade other major currency pairs such as the Euro USD and USD JPY too. You should not get too caught up with which currency pairs to trade. A lot of other currencies also experience a lot of volatility during the overlap of these two trading sessions. Therefore, you should firstly pick a few currency pairs and see how they behave during this overlap period. Based on this and depending on your familiarity with the currency pair, then you can narrow down to trading 1 or 2 currency pairs during this time period. So here is JPP USD on a 5 minutes chart. We have the Tokyo range here. The market opened with a downward breakout. At this point, we know that we want to go long when the price returns on the other side of that range. The market returned almost immediately on the other side of the range, offering a good trade to the upside, with a lot of traders trapped below the range. The same pattern once again. We have the range during the Asian session, the false London breakout, and the move in the opposite direction. This London breakout trading system is not a foolproof system, so you will have trading losses and days with a true breakout. You will encounter days where the price breaks the range and trades above it or below it for the rest of the day. And that's okay. You have to do some work and backtest to see which pairs offer most false breakouts during the London session. Here are other examples of London breakout trades. The main advantage of trading the London breakout trading strategy is that it is very simple. There is no complicated use of multiple indicators. You just need to draw correctly the Asian range. That's the most important part of this technique. Once the trade has reached the day's profit, you don't need to stay glued to your chart and wait for other trading opportunities. As mentioned, when you stick to 1 or 2 currency pairs using the London breakout trading strategy, you can make small profits on a daily basis. As always, if you learned something new, make sure you subscribe, click the notification icon, and leave us a like to show your support. Until next time.